because, I mean, quite frankly, people don't want to go to the branches anymore.
Yeah.
And when they want to go to the branches, they quickly want to learn how they can avoid going to the branches the next time.
Yeah.
So there is that massive retooling that has to happen in the banking industry, and the fintechs can play a massive role in helping the banks not just retool their employee bases, but also update their menus and, and strike meaningful communication with their customers so that behavior change happens.
Yeah.
There is technology skill that's required because fintechs are tech companies which are writing code. So for example, Finja has 150 people, out of which about 65, 70 are hardcore tech people that are writing code. So code is in high demand. Then product development is a massive skill. And then along with product development, there is process re-engineering. So process re-engineering, product, tech, and then digital marketing. And then a new type of enterprise sell, which is now happening digitally. So I would say that on the fintech side, we would need these things along with a mindset to go out and partner with the incumbents. Smaller companies, which are startups and fintechs, have started to understand that they can go out and collaborate with themselves and go out and unlock disruption.
Our guest today is Mr. Qasif Shahid, CEO of Finja. Qasif is also a member of Parvaz's working panel on financial services. Welcome to the platform, Qasif.
Thank you, Jawad. Happy to be here.
Qasif, let's get started with asking you to give us a brief introduction to Finja for our audience.
Yeah, Finja is a fintech in Pakistan. And, it's in a class of its own because it's the only one which has 2 licenses to its name. One of the licenses allows us to operate like a bank and take deposit and own customer-facing wallets, etc. And the other, this has been given by the State Bank, and the other license allows us to go out and do digital lending under the SCCP, which is the Securities Exchange Commission.
Mm-hmm. Okay. Thank you so much for that. And Qasif, so talking about the current context that we are living in, the pandemic, which has devastated businesses around the world, and business in Pakistan are no exception. How has this impacted the financial services industry in general, but specifically Finja's business?
Yeah, it's a great question. The thing is that digital financial services and fintechs are one of the few industries that are actually experiencing a serious pull or an upside as a consequence of the pandemic. And the reason is, it's actually twofold. The first reason is that the customers, which in this case are individuals and also businesses, which we call the SMEs, the corporates and the institutions, they have realized that they can't operate or they can't function without digital financial services. So in their personal capacities and in their business capacities, they're now almost screaming and demanding these next generation of products. That's the first fold. On the second side, the banks have realized that it's almost impossible for them to up their play and in a short period of time to come out with those cutting edge products which are so necessary for these businesses and individuals to operate and function now. So banks are now looking towards fintechs to collaborate, and through this collaboration bring the next level of digital financial services to the to the businesses and the users. And fintechs that actually have products on ground and are regulated are a unique position because the banks have the comfort. The banks are nervous when it comes to collaborations, and if you are not established and if you don't have the licenses, it's the wild west for them. But if you have these licenses and offerings, then it's a beautiful environment now to quickly collaborate and take products and services to the market. So we are feeling a serious push in the right direction in our industry.
Mm-hmm. So, given that the fintechs have prospered in the current environment, has it been able to protect jobs? And not only that, has it been able to create more jobs?
Yeah, so now, in the fintech itself, it's early to, so, when the pandemic comes in, the fintechs would also have to look at themselves and re-engineer and restructure themselves. So initially you would see a few fintechs go out and shed some people, but that is only the initial reaction for them to recalibrate to the realities, and then the growth spurts would come. So what's happening now is that the fintechs, some of us, we've completed our re-engineering and retooling, and now we are in a growth mode. But the kind of skill set that we are looking now is different than what we were looking pre-pandemic. But most definitely, the fintechs are swelling in terms of people, and they're not seeing a cut like some of the non-digital part of the financial services is saying.
Qasif, what does the business outlook for fintechs look like over the next 12 to 18 months?
Yeah. See, for that, we have to understand that how is banking now, changing. And, it becomes apparent that cash, I always say this, paper-based instruments like checks, pay orders, demand drafts, and paper itself is something that's going to now disappear at an unprecedented pace from the banking industry in all markets, especially in emerging markets, because that's a lot of use of, cash and paper is there. Now, so we have to ask these questions that what is going to happen to all the people that are actually dealing in and handling these, checks and cash and paper and all of these instruments. And the answer is that those people would have to be reskilled and retooled in a way that they can then contribute in the uptake and the subsequent usage of digital financial services. So the big challenge for the banks is to, a lot of banks had a position that the branches are going to go out, on a slow gradient. But what the pandemic has shown is this, that, the gradient has become a lot steeper now. Because, quite frankly, people don't want to go to the branches anymore. Yeah. And when they want to go to the branches, they quickly want to learn how they can avoid going to the branches the next time. Yeah. So there is that massive retooling that has to happen in the banking industry, and the fintechs can play a massive role in helping the banks not just retool their employee bases, but also upgrade their menus and strike meaningful communication with their customers so that behavior change happens.
Yeah. Qasif, given the changes due to technology that are happening in the financial services, what kind of skill sets is the fintech going to need over the next 12 to 18 months?
Yeah, so, the thing is that the fintechs and banks would do very well if they collaborated with each other, right? So the main skill that's required on both sides is in forging partnerships and collaborations and running those collaborations and partnerships on a win-win philosophy. Now, that requires a special type of leadership. And I've said this on various forums, and I'll say this again, that the banks seem to be seriously deficient in this leadership skill set, which is to collaborate and partner with entities which are much smaller than yourselves now, but then collaborate in a way where there is a win-win. It's a collaboration of equals through which you go out and create value. If you go out and make fintech partnerships and make them your vendors, you would not be able to unlock the value that comes out of the. So the main skill set that's required more so at the banks than at the fintechs, I say this because the banks for the last 300, 400, 500 years have never been put in a position where they had to force these partnerships and collaborations. So the banks historically and traditionally are not geared to go out and create these collaborations. So the foremost skill set is a leadership trait at the management team level to create these partnerships. And obviously the fintechs would have to reciprocate that skill to work with the banks. That's number one. Mm-hmm. Number two is that at the management team level of the banks and at the board level, people have to be trained to a degree in understanding what technology is and how technology can change the game, and then apply that knowledge in the evolving business models. But banks at very senior levels seem to, lack that skill. And, that's another thing. On the fintech side, there is technology skill that's required, because fintechs are tech companies which are writing code. So, for example, Finja has 150 people, out of which about 65, 70 are hardcore tech people that are writing code. So code is in high demand. Then product development is a massive skill. And then along with product development, there is process re-engineering. So process re-engineering, product, tech, and then digital marketing. And then a new type of enterprise sell, which is now happening digitally. So I would say that on the fintech side, we would need these things along with a mindset to go out and partner with the incumbents. But on the banking side, tech and the ability to forge the partnerships is the most important.
Mm-hmm. Qasif, the new skill set that the current workforce has to acquire, and given the environment we're in right now, where profits are shrinking and training budgets are getting affected, and people are working from home, so on-site training is not possible. A lot of the companies are now resorting to online learning platforms to meet the learning and development needs of its workforce. Is that something that you also see happening in the fintech industry? And is that something which is going to stay?
Absolutely. This change, actually, if you allow me, is happening at two levels. Distance learning and distance-led execution. And I would like to talk about execution first, if you allow me. You see, what's happened now because of the pandemic is that, for example, in Finja, we are running routine meetings with the bank's management team and boards, which are actually on Zoom. And once we go out and we have got all the attention and focus in those meetings, and once those meetings are run well, the subsequent meetings that the banking teams are now having in operations, in technology, in marketing, all of those subsequent meetings have also become Zoom-led and distance, because of which the cost of creating a partnership between a bank and a fintech or the incumbent has drastically come down, not at the forging of the partnership level, which sometimes would take multiple trips to multiple cities, and over a period of many months you would do that. Now it happens over days, but it's all happening digitally. But the subsequent execution, which is a very painful process because banks are conservative, risk, regulation, etc. All of that is happening digitally as well. So the cost of creating a partnership, the time of creating a partnership is drastically reduced, and the efficiency is increased. And the good thing that I need to report here is that even when the pandemic goes away, the senior management and the board and the subsequent teams have figured out a new way to interact and work and create value, which would then remain. So in the longer run, this ability to go out and virtually, connect, create partnerships and execute and launch products, I think is going to, when we look back in hindsight, will turn out to be one of the big reasons in taking the banking industry through the fintech collaboration to the next level. Now, so much value is being created through these meetings. Therefore, the decision makers are very clear and open in their mind that as their employees want to go out and upgrade their skill, the means to do that is also digital. Companies and individuals themselves and on their own initiatives are really going out and logging into these platforms for trading. And on an unrelated point, most professionals have children, and these children are now going through a completely new experience where EdTech is become mainstream. So because EdTech is becoming mainstream, because we are creating execution digitally, we are collaborating digitally, therefore distance learning is the third pillar which is coming, which is very good. I think distance learning will allow organizations to go out and invest more in learning, because distance learning can happen at any time. It doesn't have to happen in the office hours. People have flexibility and all of that. So I think it's going to really help upgrade, the general skill set as a whole.
Qasif, in order to respond to the pandemic, a lot of the companies had to innovate really fast to be able to maintain business continuity. Do any of those 2 or 3 innovations come to your mind that were adopted to address the current situation, but are now going to become a permanent part of your business and operating model?
Absolutely, absolutely. So we, in the last 3 months, and lots of other fintechs in Pakistan, elsewhere, you would see, at least the successful ones, have retooled and remodeled their products. And I'll give you an example. Like, we have a star product called Finja Business, which is a portal that allows any business now within minutes to sign up with it, digitally move money to it, and then be able to disperse payments, salaries, bonuses, incentives, and make payments to their vendor suppliers and partners in any bank account, and also be able to collect payments. So the innovation that we brought in was that earlier the sales cycle used to be 4 weeks. Many face-to-face meetings had to happen. The corporate would have to open a bank account in one of our partner banks and then link that bank account to the portal, and so on and so forth. Now, all of these things happen within a few minutes, and there are no face-to-face meetings required. There are no forms being signed. And any corporate in Pakistan, whether they have 2 employees or whether they have 20,000 employees, can go out and within minutes enable themselves on this cutting-edge payment and collection tool. Because of this new process, we are managing to collaborate with multiple banks now, including Easy Paisa, which is an financial investment in Pakistan, has partnered, and they're offering Finja Business to their users. But also, at the same time, we've managed to bring in hundreds of businesses now in the last few weeks onto this platform. So a sales cycle, which used to be 6 weeks, is now compressed into a few minutes. And at the same time, a sell, which was a push sell, where we were going to the clients, has now become a pull sell, where the corporates are coming to us on their own. Another example like this is the kind of lending that we do to small mom and pop stores, which are supplied through the FMCGs like Unilever, Nestle, Pepsi, and all of that. And the innovation there we've brought in is what's called invoice discounting. So the mom and pop store, because it's become very important in the pandemic, because people are not going to these bigger stores now, they like to go to so the mom and pop store cannot run out of inventory.
Yeah.
So what we do is that every time they raise an invoice to the distributor, we disperse a loan to the distributor, and the distributor delivers the goods to the mom and pop store. And when the mom and pop store needs to make a repayment to us, they load money into the wallet and we collect. So here is an example of a digital loan disbursement to the corner store without ever face-to-face meeting them, without ever touching a paper, without ever doing cash. And that has allowed us to do thousands of loans every month in the last 3 months because of this process innovation.
Yeah, so the technology is really transforming the way we...
Yes, and obviously these new processes, like your question was, are going to stay. Because once these processes see the kind of growth they're seeing, then pandemic or no pandemic, you don't go back. And through this process, innovation uptake increases. So in these type of businesses, process a lot of times is more important than the functionality that you're offering, because the entering through the door becomes critical. Then the functions that you could have many functions, but if people can't come through the door, those functions sit there. So the pandemic has allowed fintechs to work with the regulators and the incumbents and the banks and the users to create these new breakthrough processes which are going to change the world.
Qasif, you also mentioned industry collaborations, the big banks to collaborate with fintech in this current environment. What kind of other industry collaborations can you think of that will help not only to save jobs, but also create new jobs?
Yeah, look, I mean, one of the collaborations that we are seeing is actually with the regulator. The regulators have really, I think often they are the most neglected or the least appreciated part of the puzzle. But the real collaborations are happening through the regulators, because they are almost creating these situations where the incumbents and the fintechs are coming together and going out and creating the next generation of products. So, they're bringing the payment associations together. They're bringing, entities like Nadra together. They're bringing, startups and fintechs together. They're bringing the incumbents together. Then, there are forums which are digital and so on. So that's an area of collaboration. The fintechs themselves are starting to collaborate with each other as well. And you see, if you look at the last 15 years, it's about large platforms going out and collaborating with smaller companies and bringing them on top of them, and then allowing them to offer products and services to their user bases. And in no time, those small entities become big companies. And by that time, the platforms have also invested in them. That's the last 15 years, which has changed the world. And the playbook repeats itself all the time. It started from China, but it's repeating itself in the US and many other. And all these large new age internet companies are examples of those platforms. Now we are entering an age where the smaller companies, which are startups and fintechs, have started to understand that they can go out and collaborate with themselves and go out and unlock disruption. And it's much easier to create those type of collaborations because for three things. Number one, they only collaborate if they have disparate skill sets. Number two, they control their own destiny. They control their own decisions. Large organizations have their own inertia. They're metric organizations, and it becomes very difficult to drive them in a... And number three, the co-founders and the CEOs of smaller entities can truly commit themselves to winning for the other entity. So they have a true mindset of a win-win. Because they have a true mindset of a win-win, because they control their own destiny, because they only come together when they have disparate skill set, is in my view, is now the age that we are entering. And it's through these smaller companies coming together, we would see the next wave of innovation. A lot of that is happening, and Finja is enjoying that because we have the added advantage of having these licenses. So a lot of smaller companies who don't have licenses, who don't need licenses, because Finja itself is designed as a platform, can come in and build on top of us. So,
Very good. Now, Qasif, these are very uncertain and very difficult times for the youth that is graduating from colleges and universities and entering the job market. The job market is also going through once in a century experience where businesses are collapsing and the jobs are disappearing. What is the one positive message you can give the youth in these despondent times from the fintech industry that helps to rebuild their confidence and lift their hopes?
Yes. Thank you for asking this question. You know, the thing is that the pandemic, COVID-19, what it has done actually is that it has dislodged these existing systems on which the world was running. And if there was no pandemic, then the world would have stayed the same for many years, and these changes would have been gradual over a period of 5 or 10 or 15 years. But what the pandemic has done is that in the last 3 to 6 months, it's brought the future to us. Things that we thought are going to be problems of our children have become our problems. So the future is brought to us, and the pandemic is very powerfully dislodging the existing systems. Cash is an existing system. Paper-based instruments are an existing system. Paper itself is an existing system. Personal face-to-face meeting is an existing system. Going to work every day is an existing system. Investing money in properties is so all of these things are being dislodged now. So the good thing about the youth is that it would have been a slow decay of these systems, but now it has happened overnight. So, and we have had examples that when these type of big mega events happen, like the World War II and the World War I, and any time when the systems are dislodged, then you have a large period of growth after that, explosive growth. So, what we need to understand is that we are standing at a cusp of a green field where there is going to be a massive bull-like situation for a decade or 2 decades to come to absorb all of this. And I think the youth is in an enviable position as the dust sheds and as the new world order and the new economy is built, and it will all be driven by the young people. So the 2020 is about surviving. 2020 is not about growing. 2020 is not about being depressed. 2020 is about hunkering down and making sure that you survive individually and your business entities and families survive the downturn and then enjoy the time in the sun. So no need to be hard on yourself. This will pass, and after that, you've got the sun.
Thank you so much for talking to us, Qasif. It has been an absolute pleasure.
Thank you very much, Jawad, for the opportunity.